Hey guys, Steve here with the weekend update for August 2nd, 2014. Can't believe we're in August already, but we are. Summer's coming to an end, so I hope you guys are out enjoying the couple nice days we have left, a couple nice weekends, and then it's going to be, I guess, back to the grind. Kids back in school, and no more beach days after work. So anyway, getting back to the S&P. First of all, I guess we're going to change things up a little bit this weekend. Next week, you're going to start seeing morning videos, which are going to be eventually become the free content of the site, and then the weekend update, the strategy session, will be the premium content of the site. That's a long ways off, but for right now, I'm just trying to organize it to offer everyone, a little education, a little of what we do here in the weekend updates and the strategy sessions. So we're going to be seeing, I guess on Monday morning, you'll be seeing the market outlook for the week, and then we'll continue with some educational videos in the mornings, and then continue with the strategy sessions at night. So with that out of the way, we're going to just briefly touch on the index. S&P 500. As you know, we had a pretty big sell-off on Thursday. We really came, basically this consolidation area that we had said and we had been identifying in the strategy session broke, and now we're back down to, if you use, I don't know, let's take this line out for now. So if you use those last two lows as references, we're right back down to trend line support. On the weekly chart, you could also see the same thing. We're coming right back into this trend line support. So this is a critical area, I would say. If we get any further downside, I would think that we really have to hold this 1888 level. If you do recall, in the I think it may have been Thursday, I said I really saw no reason that we wouldn't come down to, say, 1900. We came to, let's see, 1910 on Friday. I'm not saying that's the low, but again, I'm looking at like these areas in here, this little wrong tool. Between this high and these highs here, that's really where I'm looking at. Real support should be, but I'm hoping that we don't test that. But no matter what, we have a plan to exit our trades when we have our stops hit. So let's go through our positions. We sold off this week. We sold off on Mondelez, Honeywell, and Amazon. And if you look over here on the right, unfortunately, they were all our initial stops that got hit. We never had an opportunity to trail stops higher, which puts us at these greater than 1 R losses just due to stops and gaps, and not exiting when the stop is hit. We actually wait till the next morning, so there was a little bit of slippage. So again, I don't really look too much into that because I know we still followed our plan. The fact is, it was a tough day. So and unfortunately, if we were able to be in the trade a little bit longer, these trades may have only been 0.3 R, 0.5 R, but the fact was all three of these losses that we've had so far are on our initial stops. So actually the portfolio realized gains are down $586, but we do have $706 in open profit, so technically we're up about $120. Not much, but it is something. And hopefully these that we have here will be able to take off as winners and start really adjusting this average P&L and expectancy, because what happens here is the more instances you have, the more accurate the projection. To only have 4 instances makes this a much easier number to move around, I guess, and not as accurate as I would want. So like I said, when you have 30 to 40 instances, then it starts to get a little bit more actual. So let's get over to our positions real quick. We actually had 4 that were up, and that we're left with 7 positions. So 4 up, 3 down on Friday. Apple really bouncing off of that trend line support, that previous consolidation area, breakout area. As you can see, the 50-day moving average is trending right below it. So, we'll see what happens on next week, but this is a good sign that maybe this is, a potential low, and that we can push to, the $100 level, which I think we're destined for. But, right now stop is 93.18, which is the last low along that trend line, and now it also coincides with the 50-day moving average level. So again, you would have to break trend line support, break consolidation support, and break the 50-day moving average to be taken out of this trade. ADM, this was one that we had sold on, I think it was Thursday for the Thursday for the free trade. And then, now it's bouncing. 50-day moving average is coming up to support. This channel line coming up to support. So 45.22 is our stop. Okay, I think we adjusted this down just because when I looked at this, I said, well, we could still break this 45.92 and not touch trend line support. So we adjusted it actually down a little bit to 45.22. Still up from our 43.51 initial stop. So this is what I was talking about with the other trades, guys. Honeywell and Mondelez and Amazon. We never had the opportunity to trail stops higher, so our stop was always the initial stop that was taken out. So those 1R numbers, unfortunately, are going to hurt us in the long run. But the fact is, those 1R numbers didn't become 2R. American Tower really still consolidating within this breakout bar from earnings. So right now we're pushing. Maybe we're going to drift sideways to come back into this trend line. But again, 50-day moving average is coming up to support. And right now we're looking at this level here, this $90.80 level as our stop. So basically we would have to break trend line, break the 50-day, and break previous lows. APD, this one came back, tested the top of consolidation, bounced on Friday. Okay, here's the 50-day moving average coming up to support. It's kind of catching up. Here's trend line. This is the aggressive one. This is the one that we're kind of going off of with this level down here. So 126.92 is our stop level. Again, that's still an initial stop. Let's make this green just to prevent confusion. Okay, so there was our breakout. There was our initial stop. We entered up here, and so we're obviously down, on the position, and our stop right now is 126.92, which is right below the 50-day moving average level. EQR moving sideways, finally broke out below that little consolidation area, possibly coming back to test this stop level and trend line support, which also is 50-day moving average. So that stop is 63.16. So I think that one, our stop level there is good. This candle on the weekly chart, not necessarily a good sign, but let's see how that plays out. Fidelity finally broke out of the bottom of the little consolidation it was having. I was really hoping that held and we were able to push higher to move stops up. But for right now, again, stop is 54.71. Here's 50-day moving average. Those are the previous lows. Technically, the last closing low was 55.09, but we're going to put it right below this little consolidation. And then we have the new consolidation. So again, this could come back to this, either of these trend lines, bounce higher. But for right now, our stop 54.71 is in a good position because it would require a lot of things to break, and before we would exit the trade, that would really confirm if those trend lines and moving averages and consolidations broke. Wyndham came back to the 50-day moving average almost exactly on Friday. Had this nice pullback. Basically, we're looking at trend line support. We're looking at previous lows, and we're looking at 50-day moving average support. So you can see where our stop was, 75.10. We basically came right back. That the low on Friday was 75.18. Okay, so I mean we're really right there with our stop. So the fact is, we would have to come down, break trend line, and see where this goes. So I think if we break the 50, trend line support right here, and then potentially a move higher. So let's go through the watch list for the week. Actually, real quick before we do that, there is one stock that I had on the watch list from last week that we will enter on Monday. Okay, Expedia. Here was the stock. Here was the chart we had drawn. So we're just gonna slide this around a little, like that. All right. So here's the chart. Here's the consolidation that we had identified, weekly consolidation. Okay. Here was our trend on the weekly chart. All right, so it came in very nicely, moved sideways. Now we're bouncing higher. Okay, and now what's happening on the daily chart is we had a nice little small daily consolidation, and now we're breaking out above 82.14. I didn't see any news. I don't know if it was earnings that were reported. It must have been, yeah, because they had earnings after the close on Thursday. So they pushed higher. So right now we're going to actually enter a position at 84.46, and our initial stop level is going to be 77.26. All right, so 77.26 puts us at these lows and the 50-day moving average lows, and then we would also have to break this trend line we had drawn. All right, so now let's get over to our watch list for this week. Obviously, as you probably thought, much smaller than last week. A lot of positions actually from last week's watch list will remain in this week's, so I'll run through those real quick. Let's see, Apache, I'm looking for a break over 103.34. Okay, it broke out from this weekly. Now we're kind of consolidating a little bit again through here. All right, and that's this little consolidation here. So I'm looking at it, broke out, kind of came back sideways. I'm looking for another breakout again over 103.40, and then I think we could still set our stop down here at 97.90, just because of where the 50-day moving average is. We're still well above the 50-day moving average. And Darko was one that's from last week. We're still consolidating. Really just bounced off the bottom of the box. And earnings have passed. So that one looks like it's in the clear on the weekly chart. We're moving up kind of like in a stair-step fashion. So I'm anticipating potentially breaking this 112 area and then moving higher from there. Broadcom, this one again moving sideways, allowing the 50-day moving average to come up. Let's change this color a little bit. That's a little better. Maybe it was a little tough to see. So anyway, allowing this 50-day moving average to come up. We're still in consolidation. It had a breakout from earnings that failed, so it needs a little bit more time to consolidate. I'm thinking that this 50-day moving average continues higher. We hit it and kind of ricochet higher off of it. Cardinal Health is a new one. On the weekly chart, you could see we're moving sideways. All right, and then on the daily chart, I'm looking at this small little consolidation here as a potential area to get in. Trend line moving higher. So that's kind of what I'm looking at with Cardinal Health. Again, the longer it moves sideways, the better off. So to allow this 50-day moving average to catch up, earnings are on the 4th, it looks like. So that could be the trigger. Disney is one that I've actually been long for a while. But again, we have this nice, on the weekly, we had this nice breakout from the weekly chart along the trend line. Okay, so obviously we know we want to be long the stock. Now we just have to figure out an area where we want to do it. And I'm looking at this nice consolidation that we have, right back to the 50-day moving average. Okay, So, but again, earnings for this one are coming up on the 4th, and that's probably going to move the stock a little bit. Estee Lauder, this is one we identified last week, actually below the 50-day moving average, but still in consolidation, breaking out or trying to break out on the weekly chart. So I like this little pattern here, but this maybe looks like it wants to roll over. We'll see what happens. Expedia we covered. We're going to be entering that on Monday morning. Green Mountain, still moving sideways. I really think it moved sideways for a while, at least to touch this trend line and the trend line here at 110. 50-day moving average is basically horizontal, so that really indicates that there's some consolidation going on. Healthcare, HCN. So this one here, again, moving sideways on the weekly chart, right through here. Okay, and that's what this consolidation area is here. So I'm looking at these two levels. So between 65 and 62, I would like to see a breakout over 65, obviously, and then we would be able to set our stop down here at 62, because I think this trend line probably, you could still draw the trend line, something like that. So, we could see how it works if it's something that we want to be really tight with, because the 50-day moving average is going sideways. We could really put our stop here at 63.60. HCP, another one consolidating on the weekly. Okay, and here is trend line on the daily, something along those lines, with this consolidation area right up here. So it's really trying to test those highs and see, that's only a $2 range. So let's see how that works. Again, earnings coming up for that one soon. Hess is one I've been trying to get long for a while, just because you could see on the weekly chart, it's been kind of moving sideways. We had a couple nice little consolidation areas that, even we missed. So now it's doing it again. And similar to the Conoco and a couple other energy names, really performing well. So again, trend line coming up through here. 50-day moving average below it. Over the $100 level seems to be the trigger for this one. Earnings have passed. It tried to break out on earnings, couldn't do it. So let's see if it can hold that box and make a move higher. H&R Block coming through on the weekly chart. All right, we're moving sideways. Now we're kind of pulling back. So this is actually a little bit of a different setup. I'm looking at something more along the lines of, a breakout over these this trend line. So we could call it, say, a breakout over 32, and I think that may get us going. That may bring us to 33. We'll see what happens. IVZ is one we looked at. JWN, again, still consolidating, one we've identified for a while. Kroger, again, nice breakout from a nice weekly base back here, moving higher, trying to find a good spot to get in on the daily. I'm looking at excuse me. I'm looking at a box here, and again, trend line support coming up to support 50-day moving average coinciding. So I really like that setup. I think over $51 is a great entry for that. Lockheed Martin is one we had identified. We took off the list. It broke out and now pulling back, but I still like the weekly chart. Honeywell failed on us, and that was one of the reasons we didn't take Lockheed Martin. Was we were trying to keep our diversification spread out. But right now, I'm looking at a breakout. Oh God, looking for a breakout over 170. I guess I'm coming down with something. I got a little something going on in my throat. So the squeaking is not normal. Lincoln National had earnings really pulled back to the bottom of the box, but this consolidation area is still valid. We're still within weekly support, so let's see how that one reacts in the next couple days. Macy's doing the same. Marriott, look at this nice trend higher. This is a great trend. Okay, we're coming up. Weekly looks great. So now we're looking at this small consolidation area right through here. So over $67 would be a great place to get in, and our stop would be set at 63.40. Mead Johnson. Again, here's our little daily consolidation right back to 50-day moving average. Weekly trend is higher. Daily trend is higher. Right? So this is what we identify. We identify these positions over the weekend when things settle down, kind of just get our idea where we want to enter. So we want to enter right now at 96.50, and our stop would be at 91. That's a great $5 stop, a great position size, and great entry. Marathon Oil is one actually breaking the 50 a little bit, but I'm looking at these little tails here and how it actually closed above that. So this is one that potentially may not work out for us, but I just wanted to keep it on the list because it broke so minimally on Friday. Let's see if it can get back into this box and then eventually move higher. This almost looks to me like a fake out to the downside, and then it'll move higher, but let's see how the price reacts. Northrop Grumman, again, something similar to Lockheed Martin. I'm really looking for another break over this 128. I like how it comes back down to the 50-day moving average and starts to bounce. Prologis is one that we've identified for weeks now. Still doesn't want to break out, but see how it's moving towards weekly trendline support. So maybe we can push sideways for another week or so and then eventually bounce higher. And with that base, there's going to be some definitely momentum behind it. Public Storage, another one we've had on, really just moving sideways, sitting below these lows, or I'm sorry, below these weekly highs. Let's see what happens with there. Republic Services, trend line higher. There's your two areas. We don't want to restart now. Remind me tomorrow. And again, on the weekly chart, we broke out from this nice long base. Okay, so now we broke out, moved higher. Now we're digesting those gains, and now I want to see if we can move higher again, because that's a great setup to break out and then move sideways for a while. And there's your trend line on the weekly. So those have some momentum behind them. I'd like to see if we can get in on that. Schwab, moving sideways on the weekly. All right, here's your daily area in here. Something along those lines. We had a failed breakout. Let's see if we can push higher again. Again, it's a sloppier chart than normal. But if you take out some of those tails, you got a nice trend line up there. So let's see how that works. Sealed Air, we've been in, or we've had on the list for a couple weeks, still moving sideways. SPG, here's the daily trend line, kind of broken. 50-day moving average almost broke, but I still like this consolidation through here. You could even actually almost take it back and do something like that. So a breakout over 170 would put our stop somewhere maybe in these areas, 165ish. Seagate Technology, here's our little consolidation on the daily. On the weekly, we're moving sideways as well, so we're right below weekly resistance, trying to break out. Now we're consolidating. 50-day moving average is catching up. Let's see if we can get a push over 61ish, and then we could set our stop right below the 50-day moving average. Tesoro, again, moving sideways on the weekly chart. Let's take all these off. Remove all drawings. I'm looking at. That's the wrong one. I'm looking at something along these lines in here. So break over 62, stop below 57 along this. Again, it's a little sloppier than some of the patterns we've been in, but I think what we're looking at is a trend line that went up, ended, now we're consolidating. Let's see if we can get another breakout. Time Warner is one we identified a couple weeks ago. This is not the one we've exited. This is actually Time Warner Cable, TWC. So again, breakout from the weekly chart. Now we're sitting right above it. 50-day moving average catching up. Now in daily consolidation. So break over 150. I think we could set our stop down here at 145. Two more. Western Dig. We had this nice breakout on the weekly chart, moving higher. Here's our trend line that I'm going off of, and price level is here. So this one might be something we enter, and then we put our stop down here at this 93 level. We'll see how it works out, when it actually breaks out. We could be sorry guys, we could be more aggressive, obviously get a breakout, put our stop here at 98, and then that would basically tell us when trend line broke. And the last one, WMB, similar to Nordstrom's, had a nice huge gap up, moved sideways since. So obviously this one's pretty straightforward to look at. I don't know if these guys are getting bought though. I'd have to look at that actually, because that looks like a chart of somebody that's getting bought. See how just kind of no real movement from here. So let's see. We're gonna leave it on the list, but I gotta do a little research on that one just to make sure that we're not getting into something that is being bought, because we don't. That's the one reason we got out of Time Warner. So that's it for today, guys. Again, markets look a little weak. Maybe we get a little rebound early in the week. We have our plan set. We have our stock set. Now it's just a matter of executing. And as I said in the beginning, definitely be on the lookout early in the week and in the mornings for some new videos that more educational and outlook videos. So like I said, trying to really make this a great service, and I appreciate everyone who provided some feedback. All right, guys, have a great rest of the weekend. That's it for today, guys. So if you haven't already, please follow me on StockTwits, Twitter, and Google+, and subscribe to the YouTube channel. And if you like the video, please give it a thumbs up and leave some comments below. Thanks for watching. See you next time.